Welcome to the Remarkable Retail Podcast, Season 3, Episode 10. Can you believe it's October, the 10th month of the year? I'm Michael LeBlanc.
And I'm Steve Dennis.
Let's talk about earnings, another batch of earnings, and some information on Warby Parker. What have you distilled from this week's earning calls?
Well, a lot of just general retail market activity. So the three earnings announcements I thought were the most interesting. Let's start with the good news. The good news for the most part was Costco, which had, I want to say, about a 10 or 11% sales increase and an even better earnings increase. So those were pretty strong numbers, even though they alluded to concerns about inflation, supply chain, and all that kind of stuff. So they managed some pretty good numbers despite some of those headwinds. And also, I would have thought, this has come up several times where with COVID being a little bit less of an issue, that grocery isn't having the kind of banner year as people go back to eat out more. And Costco's not a traditional grocer; they've got a mix of other stuff. But I think Wall Street was expecting that their sales might be tamped down a little bit, and they weren't. So that was pretty impressive. On the flip side, well, let's say the moderate side, Nike's earnings were actually pretty good. I mean, their sales, a good solid sales growth. Most people would be happy with the kind of sales growth. I think it's like 19% or something in the US, 11% in China, which was a little bit low for them. Their margins were actually pretty good, but people got pretty concerned because they talked about all the supply chain challenges they're having, and they basically guided much lower for the balance of the year, and I think into next year. And I think we talked about this maybe a few weeks ago about how much product Nike, but others are having made overseas and in Vietnam in particular. And Vietnam just nothing's coming out of there, and it doesn't look like much is going to come out of there for quite some time. So that was a big damper on Nike. The one that was pretty surprising to me.
Let me say something about Nike first and that supply chain. Three things. I was thinking, and I read it in an article. I wanted to get your feedback on it. That Nike is going to use this as a lever to even choke further their distribution. In other words, if we can't make as many products as the distribution channel can absorb, let's just put the best ones on Nike Direct and further our ambition, like kind of make good, so to speak, make good of the problem. That's one thing I want your opinion on. The second one is what I've started to observe is this country shopping. I saw a brand said, well, I'm going to move my shoemaking to Indonesia. In other words, I'm going to go to a place that, the vaccination rate is equally low, but the government seems to be a little less caring. I think that's going to come back and bite a lot of brands in the rear end if they're not careful. Yeah, exactly. Yeah. But anyway, let's talk about the strategy here, because they're not the only brand. Apple has said the same thing. I think Apple said they're going to miss out on like $4 billion of sales because they can't get enough product made. Is this the time to say, well, listen, if we can only, you and I remember those allocation discussions that would inevitably happen with brands.
Right. Yeah.
Right. And now, is that something you think you might see?
Well, I think one of the big questions, which I don't have an answer to, is, how much of what we're seeing right now is a 6-month phenomenon versus much, much longer. Certainly in Nike's case, and I worked with Nike a little bit in the beginning of their journey here, so I know a little bit about at least the birth of that, and I don't have any inside information that I would share. But I mean, I think they've been pretty clear of their intentions to build out this consumer direct offense, which is both their e-commerce as well as their owned various formats. So this just makes it easier for them to lean into that. But you have the general issue of, if you're really going to both maximize your margins as well as control your destiny, and product is in short supply, I think it's just acting on behalf of the shareholders and the long-term interest of the brand. You're going to lean into protecting the stuff that you control. But there's this risk with all these strategies of going so strongly to your own controlled channels that the distribution partners that help build the brand over decades in many cases, and I'm not just talking about Nike, really any of these brands. They extend your reach. They attract a customer that's a multi-brand customer, maybe not just Nike specific or Under Armour specific or whatever, whoever that might be. So there is some risk there, but that's why I say if it's a 6-month thing, I think people will just, hey, it's business. This is short term. If it looks like that's going to
Mm.
cause them to really even double down and squeeze out, kind of take advantage of a difficult situation to squeeze out some wholesale partners that maybe they want to have, then that I think that could come back to bite them. But I just I think it's pretty
Yeah.
hard to know when this is going to start to really clear up
Yeah.
materially.
Yeah. I mean, last thing I'd say on that is having had some discussions on the other side, they'll hold a grudge and say, okay, I remember when, and there's more like one door closes, another door opens. Let's just
Sure.
go carry these other 3 brands. And, it's good to be king. It's not always
That's
such.
exactly what I was going to say. Yes, but it's good to be king, and uh, for better or worse, a lot of these brands really understand how strong they are, right? And they leverage that. But yeah, that can change over time. I'll just give a quick anecdote. Um, when I was at Neiman Marcus, I think the general belief among, in terms of retailers like Neiman's, like Saks, like Barney's, was that, we controlled access to the consumer and we could even be tastemakers. And so, you couldn't do that power play with Gucci or Louis Vuitton, but a lot of the other brands that weren't as strong, we felt like we had the cards, and we frankly flexed those muscles a lot. Well, that was that worked in the 80s and 90s and maybe until 7 or 8 years ago, but it doesn't work so much anymore with all the
Yeah.
explosion of online choices and these brands going consumer direct. So yeah, I think that you have to be careful, to take the long term perspective, because clearly situations change.
Right on. All right. Well, that's enough about that. Let's move on. There's some other couple of interesting pieces of news. Talk about Bed Bath and Beyond's
Yeah,
numbers.
well, the train wreck, I guess you could say, which is probably charitable in the earnings announcements. Bed Bath and Beyond, folks may know, certainly it was struggling for quite a long time, but they brought in a whole new leadership team. Mark Trident from Target, most notably, but a whole bunch of other senior executives, and they've been implementing not only extensive private brand programs, remodeling stores, bringing in new brands, and so they actually were posting some pretty good numbers, seem to have some pretty good momentum. And then they announced this quarter where sales retreated significantly. And they talked about how traffic, I think I don't have the number in front of me, but the traffic to their stores in August was down 20 something percent,
Wow.
which,
Wow.
on the one hand, you could say, well, yeah, COVID in certain areas has kind of come back, but that seemed to be really out of whack with what a bunch of other people are reporting. They also, like everybody, are talking about supply chain, cost of goods, inflation, those sort of things. And so, both the warning aspect that we saw in a lot of retailers, but in particular the traffic declines, caused people to run to the exit. I think the stock was down 20-25% the day of their earnings
Hmm.
announcement. So that's a little bit mysterious, not good news. The other kind of market news, is what I would put under the kind of IPO boom heading, which is a number of retailers, some of which we talked about in the past, like Allbirds and Warby Parker, going public. But we've got Guitar Center, Claire's, Mattress Firm. So you got these kind of hot, sexy brands like Allbirds and Warby Parker going public, and then you got these other 3 brands which were bankrupt, in the last year or
Right.
so, also going public.
Yeah.
So we'll see how that sorts out. But the one that did actually go public this week was Warby Parker, which we talked about with Dan McCarthy a couple episodes, I guess, at this point. And they went public. Stock rose a lot. I believe they closed, as we're
I saw
recording this. I believe
50%. I saw.
it spiked a lot. Where it's sorted out, I haven't looked at the market today. We're recording this on Friday, but their valuation at the close of their first day of trading was about $6 billion. Fun fact: same day, I think, Bed Bath and Beyond, with their announcement, their market value is $2 billion. So here you've got this, really well-known retailer with 800-900 stores, I guess, multi-billion-dollar business with a $2 billion valuation, and then Warby Parker, which loses money and maybe does $600 million in the year ahead, $6 billion
Hmm.
valuation. So, future of
It's
retail.
become a story.
Yeah.
I don't know. I think Warby's become a story stock versus a stock that trades on fundamentals. I mean, clearly,
Yeah.
as our guest pulled it apart, and as we discussed, they're a small business. I mean, they're not a big business. But boy, I got even more certain when I saw those numbers that they're going to try and consolidate the market. I mean, with that kind of valuation, that's a pretty big. Storehouse of cash to go out and not cash, but value to go
Yeah.
out and
Yeah.
start scooping companies up. Now, before we get to our you and me just chit and chat, and I want to remind the listeners, or conversely the viewers, well, if you're viewing this, you already know we have a YouTube channel, and it's bonus content because you and I chit and chat for actually closer to 20 minutes, half an hour, but we kind of for time we kind of trim that down to about 10 minutes. But if you want to hear our full discussion, we get into some fun stuff back and forth. Let's get into this Honey, I Shrunk the Store discussion. So let's kick it off.